Good morning everyone and welcome to Morning Markets on Thursday the 8th of December. Two broad issues for you today covering the UK and the broader global economy. We'll begin with the UK and two data releases yesterday which were timely in indicating the headwinds which the UK economy faces. The first would be the aggregate mortgage rate from the British Banking Association for the month of November, which came in at 5.88%. This is an aggregate mortgage measure for the typical homeowner who wishes to get a new mortgage in the mortgage market. And that's now rising towards 6%, which is the highest rate on a mortgage since 2008. Now, also yesterday we had the monthly print from the Halifax House Price Index, which showed a fall for the month of November of over 2%. And again, that's the largest fall we've had since 2008. So the UK, in terms of credit conditions, is facing many of the headwinds similar to the period around the global financial crisis. But of course, the economic backdrop is very different. We have full employment, and as yet, there are no leading indicators to indicate that there's material weakness in the employment market coming down the line. In fact, we still have the unusual event where there are more jobs open than there are available workers. But what this does put into context that there are building headwinds for the UK economy. On the monetary side, the high interest rates are really going to curb house price activity for the next 12 or maybe even 24 months. And we know from the fiscal side and the energy policy side that there are severe constraints on household disposable income. So the UK doesn't need to look far for its troubles, but what about the global economy? Well, on its own, these UK economy challenges aren't really a problem for multi-asset portfolios here at True Potential. But what we're seeing in the global economy does give us some interesting indicators about what the market thinks the outlook for global growth is. What we've noticed over the last several days is a cooling in market prices which are sensitive to growth, going lower, particularly in equity prices, but we're also seeing bond yields fall. So this is this ending of this correlation we saw for the most part of Q1, Q2 and Q3, where bond prices and equity prices fell together. We're now seeing bond prices rise as equity prices fall. And this is a fairly broad signal of quickly cooling global growth. The bond market is now pricing something like a high probability of recession within the next 12 months. The equity market is pricing what we would describe as perhaps a soft landing. That is that monetary policymakers, those people who raise interest rates or sometimes cut them, might actually be successful in engineering a rapid cooling in inflation without severely impacting employment markets. So, within this global context, there are two key stories. The first is in China. Colleagues have spoken to you over the last week about the building reopening narrative across the domestic economy there. That now appears to be official. We've had new stories today and overnight about relaxation of quarantine rules. People will now be able to quarantine at home as opposed to official restrictive sites, and also relaxation in domestic travel. And this really has allowed, as we've seen over the last 10 or so days, a double-digit rise in Chinese equity prices. However, context is important. These prices are only back to where we were towards the end of Q3 of this year. So we saw a severe dip in equity prices in the beginning of Q4, and now these have recovered their losses. But the context, the further context here is that China is one of the few economies which is actually cutting interest rates. It's trying to stimulate its economy through easier credit conditions, mainly for real estate borrowers, those who have seen the price of their assets fall markedly through the housing and real estate recession over the last 18 months. And COVID lockdowns have just compounded the problems there. So China is reopening. There is going to be a global growth impulse as the economy emerges toward the back end of the winter from the spectre of COVID, and hopefully the impulse from increased Chinese growth and activity can help offset the slowing growth we're seeing elsewhere. So thank you for joining us, and please join us again as we'll wrap up the week on Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.